Hello and welcome to this week's Trade of the Week on Monday, the 30th of September 2024. Let's begin by having a look on our short soybean trade, which we did on the 9th of September. And you can see here we went short thinking that the downtrend would continue, and it did go slightly lower. You can see our entry level at 1,023 on this daily financial bet, actually 1,020 it was. But since then, we traded sideways. And then last week, we actually went to the upside. But because we had a very wide stop on this trade above the low seen back in April and the high seen in early July, we are still in this trade at the moment, but currently underwater. So our stop loss is still at 1,150 on this one. And the week after, we went, I believe, long New York sugar futures, and that trade worked out extremely well. You can see here we got in at 1,900, at 1923, I should say, here on this daily financial bet, and then saw a very sharp rally. And for those of you who didn't get out at our upside target at 21, and then last week I said we were trading at 22.80, had no reason to get out either. Well, maybe you have gotten out around the 23.50 area or so, but if you didn't, for me, an exit would have been once we had this gap lower on Friday. So I probably would have gotten out around 23 or 4 or 5 or something like that. But anyway, for me, that trade has probably run its course short term. You may want to get out now, or you may hope for a bounce back still, which is also possible, but that's really up to you. But anyway, that trade worked out really, really well. And you can see here our potential risk, which was much smaller than our gain, and that's what trading is all about. To, on average, make more than you risk per trade. And then last week we went short corn futures, and you can see here we did so at 413. We had a stop loss just above the previous highs here at 420, and basically we did. At first, we were looking good. We had a drop in the corn price, but then we had a huge reversal to the upside on Tuesday, and therefore we got stopped out at 420. So we lost 2% of our capital on this trade, and that's why we only risk 2% per trade in order to keep our losses small when we do get it wrong, which is bound to happen at some stage. And this brings me to this week's trade of the week, and what I would like to do. With all the Fed speakers coming up this week, and with Jerome Powell speaking and non-farm payrolls on Friday, and it being October when market volatility quite often increases quite dramatically, especially between around the presidential election years in the US, I want to buy the VIX, the volatility index. So that's my trade of the week, to go long the volatility index. So this week's trade of the week is to buy the volatility index with a stop loss below the late August low around 15.25 and an upside target of probably above the 30 mark.